Good afternoon, everyone. My name is Noreen Kabir. I'm the Senior Program Manager at the New Cities Foundation. We're going to change the rhythm a little bit. Please stay seated. It is with great pleasure that I introduce to you the first in our series of brief presentations on exciting urban innovative projects from around the world. This is going to be a very informative and interesting lineup of presentations that will hopefully inspire you to undertake similar projects in your own city. To set the stage for the fantastic projects you'll hear about over the next 2.5 days, I'm honored to introduce Mr. Pierre Simon, Chairman of the Greater Paris Investment Agency. Mr. Simon will present the findings of the Global Cities Investment Monitor, which is an annual study that examines and ranks global cities according to their economic competitiveness and attractiveness for investment. Welcome, Mr. Simon.
So, good afternoon. You see, it's not very easy to speak just after this panel. You see, this splendid panel. And I will have an economic approach. You see, I don't know if it's right or not, if it's the right way or not, but what is sure is that at the moment, innovation and power and production are increasingly concentrated. And when you look at the international investments, you see that it's clear that this concentration is now happening on a very, very global scale. You see it's in the global cities that international investment concentrate. The 20 leading global cities concentrate each year a larger scale share of global investments. Last year, in 2011, they accounted for almost 1 in 5 investments. In the top 5 global cities alone, they concentrate 50% of the investments made in the top 20 global cities. It means 1 in 10 globally. Money goes to money. Talent goes to talent, and innovation goes to innovation, but not only. You see, for most of the 20th century, there were only 3 global cities in the world. London, New York, Paris. And global cities at that time seemed made to stay. The club was closed and the membership stable. But since the end of the Cold War, unprecedented change is taking place. And the international competition has never been so intense. And it is in the global cities that it takes place. The Global Cities Investment Monitor that our agency, the Greater Paris Investment Agency, conducts each year with KPMG seems to me a perfect illustration to what I am saying. First of all, the overall image of the global cities. I mean the perception. You see, each CEO interviewed names 3 cities. It's the reason why you have on the slide more than 100%. You see. Of course, long-term stability at the top. So long-term stability at the top makes a difference. And investors pay tribute to the global cities that have played, you see, a long role, an important role for the longest. And it's the reason why they name Paris, London, and New York above all others. It's in these 3 cities that decision-making, innovation, worldwide connections, and influence are still most expected. But however, you may observe, you see that next to the top 3 cities come 4 Asian metropoles: Tokyo, and especially Singapore, Hong Kong, and Shanghai. And year after year, their position is improving. You may also note that Sao Paulo appears in the top 10, This tells you something about the rebalancing of the world that has already taken place. So now, after the perceptions of the global image, the perception about the global cities in which investors think will be invested in the next years. Two cities come to the top, Shanghai and New York. Investors think about a bipolar world, the West, Northern America, and Europe, and the East Asia. Chinese cities alone are quoted more often than London, Paris, and New York together. Or is this image true to the new reality of international investments? Partly yes, but only partly. No, so after the perception, you see the reality. Where have investments occurred last year? And just a word, in the slide you can see that we count Greenfield investments. A Greenfield, just a question of definition. A Greenfield investment occurs when a company opens a subsidiary or launches a new activity in a city. Our data may slightly favor emerging cities. Indeed, in mature cities, companies are usually already present and simply expand existing activities. There are, as you can see, there are 3 Chinese cities in the top 5 global cities: Shanghai, Hong Kong, and Beijing. Mumbai come in 10th position, so Asia is a major destination for investors. But globally, the top 10 global cities are much more diverse than expected. You can see that São Paulo, Moscow are major venues for investors, and that was not well perceived by the panel of perceptions. So all BRICS economic capitals now play leading roles in the global economy, and New York, and especially San Francisco, have managed a remarkable comeback as the smart cities. Neither New York nor San Francisco occupy exactly the position imagined by the investors. New York ranks 5th, San Francisco 2nd, and it was not the perception of investors. European cities, London and Paris, attract much bigger shares of investment than investors assume. And remember the previous slide. In fact, London and Paris both belong to the very top global cities. So, in reality, investment fluxes are far from being bipolarized between the West, Northern America and Europe, and the East Asia. The competition is much more open than imagined, but it is increasingly centered on top global cities. This new picture is only slightly different if we consider the last 5 years instead of the last year only. European cities such as Madrid or Barcelona are in the top. Mumbai and San Francisco are not. If we consider the last 5 years. Competition is slightly more bipolar over the last 5 years, but overall, you see economic regions figure on the map with at least one global city in the top. For the Greater Paris Investment Agency that I chair, the monitor is a kind of unique roadmap, and it helps identify competitors and locations for our roadshow. You see, it's often a perfect introduction card because all over the world, people love rankings, people love being in the top position, that's true. And so, thanks to the monitor, roadshows enjoy a much larger media coverage. But our agency conducts indeed roadshows in all emerging economy. And so our agency was created by the Paris Chamber of Commerce An industry, 20 years ago, we gathered now 100 of the most successful international companies based in Paris. I did that, you see, because there is no better argument for investors than the words of other investors and that the success stories they created in a city. The monitor also helps us identify and develop the assets of our metropolis regarding, you see, the key criteria for investors. You are there, infrastructures, public transportation, connectivity, human resources, innovation, market accessibility. You have all these kind of criteria and the weight of each of these criteria on the screen. And of course, this monitor is a unique source in communicating on the attractiveness of the Greater Paris. You see, Paris and the Paris region is not only the Ville Lumière that everyone knows. It's a world-class business capital, and there is a gap. And when I listened to the panel, I realized that the gap is a deep gap. There is a deep gap between the perceptions of the Ville Lumière and the economic reality. You see, Paris ranked fourth in the world for international investment over the last year, but just some figures. The Paris region GDP amount of about 100 billion of US dollars. It means that this region ranks ahead of states such as Switzerland or Belgium. It's the third concentration in the world for Forbes 500 headquarters. It's the second office market in the world, just after Tokyo. It's the second market in the world for asset management after Boston. And it's the first concentration for research and innovation in Europe, in aerospace, car making, IT, biotech, etc. And so, just to conclude, you see, just one word about the Great Paris project, Le Grand Paris. It's a major economic project. It's mainly an economic development project with almost 200 kilometers of new sublines, and that will boost the Greater Paris attractiveness. And so to conclude, I'd like to say that I am very proud because investors from Asia countries now make up to a quarter on the investments in the Greater Paris. It's a clear sign, I hope, that our message is being received. So thank you very much. And in the name of all our members, French and international groups, you are quite welcome there in Paris and there in La Défense and in the CNIT. You see, I chair some years, till last year, the Paris Chamber of Commerce and Industry, and we are one of the main shareholders on the side. So thank you to come. Thank you, and good stay in Paris. Thank you.